Morning, Jay and Terry. How are you guys doing?
Doing good, Sherry. How are you doing today?
Good.
Doing great.
So today we got some interesting topic. So first, maybe we talk about Tesla. I saw Jay your article about Tesla's Q2 delivery, and that make the share launched early this morning about 8-9%. Do you guys want to dive into some details?
Sure, I can start, Jay. So I think they beat what were really reduced expectations. And it looks like a lot of people were positioned for continued decline, mostly due to weakness in China. But it's important to remember, as you watch the stock blow up today, this was still a year decline. And it's just a reduced pace of decline. I think it was a 8.5% dip for Q1, and now it's a 5% year-over-year dip for Q2. And the stock is running into a boatload of technical resistance. We've got a big weekly chart downtrend line that's coming right in confluence with the shelf from mid-November to mid-January. You could have a gap up shelf that left some tails in there. If you can see that range right back in November to January, that's a lot of resistance. And it's the first time that shelf of resistance it was support, it's turned resistance, and it's the first time it's being tested from the underside on a rally. So those are points of confluence. So it'll be interesting to see if the stock can hold on and push through that zone.
To your point, I got the 200 weekly moving average sitting right there at that 231 level. So obviously coming in to test that. Tesla's been an interesting play the last couple of weeks. So it's been seeing some nice after being in a pretty long downward trend. Trying to break out from there, obviously, as Terry just pointed out. But the one thing that I would note with that is it started getting picked up as an AI play. Obviously, they're certainly behind the ball on that. But Elon Musk, he's got a pretty good reputation. So I think people have been giving him the benefit of the doubt. But you had this stock running with, we had some pretty nice momentum going into this report. Came in better than feared. Certainly after the Q1 earnings report, there was a lot of lowered expectations around Tesla and its ability to even meet the delivery numbers that it was suggesting. So then certainly viewed as a positive. What we'll have to see, of course, in the earnings call in about 3 weeks from now is whether or not they were able to achieve these numbers through promotions. And that's going to naturally cut down the margins and hurt valuations. So as Terry was saying, it was good news, had some good momentum, but now it's running into an area where you can certainly see some profit taking.
Yeah. So yesterday, NIO is also up like 6%, and it seems that it moves the whole EV sector like this these days. This momentum with Tesla stock.
Yeah, when the EV picture, James has been written off for dead. But now, again, we're starting to see it come back. Place that I'd probably have on the radar with this would be Albemarle, ticker symbol ALB, which is trying to get over that 100 level there. And SQM, which is a Chilean lithium play that could perhaps, with some of these better numbers, start to see a little bit of nibbling down at the bottom here. Both charts look pretty poor, mind you. So risk to it. But if we do see the EVs start to kind of sentiment, these are two plays that you want to have on the radar.
SQM and what's the other name, Jay?
Albemarle, ticker symbol ALB.
Yeah.
And not for nothing, but I would also point out that this is happening as we finally are seeing oil prices and gasoline prices get some traction for the first time in nearly 5 months, being that sort of summer driving season effect. And we see crude oil up from 73 to 83 in just the last 2 weeks. And that usually has a little bit of a kick for the EV space.
Got it. Cool. So next we talk about something about the macro. So this morning, Jay Powell has a speech at 9:30, and before he speak, pre-market, all the index is in red, and after he speak, it's gradually turned green, but still flat. So based on Jay Powell's speech, he seems that he think inflation has some progress, but towards the 2% goal, and he think maybe not cut that fast to raise that inflation may come back again. And also this morning there's the JOLTs number come out at 10, which shows a strong labor market. So what do you guys think about macro.
I can run with this first, Jay, if you want. The Fed right now is definitely downplaying cut expectations. Even I think they're even going to communicate it that way right up until suddenly they start cutting. Because I don't think that they want to allow the market to get ahead in terms of just widely loosening financial conditions in front of when they actually decide they want to start moving. And I think they're very sensitive to that in terms of how they're messaging things. So Powell is the center, and you hear Daly is basically a mouthpiece for Powell. She previews most everything he says about a week in advance, and that's been the case for a couple of years. And you can hear this same messaging. It is getting to the point where their concern is probably gradually shifting to growth rather than inflation. We saw Supercore services and the CPI actually go negative month over month. The core PCE, just moving lower and headed obviously in a direction to get into range. But the rhetoric coming from the Fed is kind of expectations for a cut reined in until they're ready to move.
Yeah, in terms of today's price action, you definitely don't want to extrapolate too much from it. I mean, holiday shortened week, a little bit less participation. So, study made around this inflation definitely could get picked up by a few algos and kind of the proceedings, especially if you're thinking that there was some that were leaning on the market. A lot of selling was coming during the overnight hours. So you had European were getting ready to leave the desk that might have just wanted to sidestep a short potentially in there too. So there's a few factors that would go in there that I don't think necessarily was Powell per se, as much as more the environment that we're operating in right now. Have a half day tomorrow in the U.S. markets, and Thursday it's closed. Friday, outside of a jobs number, which you'll probably get some participation from traders, that's looking like a very likely time frame for people to be taking vacations there. So you're just going to have that lower volume. Look at the bond markets. The bond markets barely moved in reaction to Powell's comments. The CME Fed Funds futures, there was a slight uptick in expectations for a rate cut in September following the disinflationary numbers. But Fed's been pretty adamant that one data point is not going to set the tone for them. Weaker PCE numbers. Coming up this Friday, we're going to have the jobs numbers, a lot of focus on those hourly wages. Saw today that JOLTs number coming a little bit stronger. But each number has been interesting because it's remained strong, but I just don't think that a weaker jobs number would be particularly good or what the market wants to see. So it'd be something that we're just going to be interested to see how they react on Friday, but you're probably not going to get a true read on the take on the jobs market until we get deeper into next week.
Yeah, and final thing to add to all of that, and I agree with all of that, Jay. One final thing to add, though, is the Fed knows, and we know, that the jobs market is a lagging indicator almost every cycle. So it's really not going to be a break in the jobs market that's going to, I think, shift things when they need to be shifted. And if it is, then the Fed's going to be behind the curve on the offside.
Got it. Yeah. Topic that would be interesting to discuss is that following the election debate last week, so there's a lot of people discussing what stocks would benefit if Trump will win versus Biden will win. So hear your thoughts, like in each scenario, what stocks or sectors would benefit.
Yeah, I'll be clear for people. I know that this is a very now we're certainly not prognosticators on who's going to win or like to stay in our lane and keep out of the politics. But the reality is there's going to be different investment baskets depending on who gets in there. Kind of going through the polls, we're seeing there is there's a slight edge in the presidency. GOP has an edge on the Democrats have an edge on the House. Now, there's still a long way to go. A lot of swing states we know out. This is going to be a close election. But that basic math, what we could be looking at is some of a hung parliament, which I think the markets would be okay with if we did get that. Of course, a very slim majority for Democrats, things up a little bit in the House, but just kind of some of the different areas that I'd be watching. Obviously, if Biden were to win, a lot of questions about the Inflation Reduction Act going on around there. I would note that 83% of the benefits that have been earmarked are going to red states. So I wouldn't expect to see that reversed or pulled back. So I think one of the big misnomers is that if Trump gets in there, he's going to look to sweep back all the IRA funding. But again, a lot of that's gone to red states, so I don't see him going back and doing that. When you'd be looking at the clean energy plays out there, the solar names, it would certainly be something that should see a benefit. And there's another area that would be expected to benefit under Biden. Tech, that would be interesting to see how that would play out, because the idea that Trump could be better for big tech with a little bit less regulation. So that's another area I need to watch, but I wouldn't get too far ahead of myself in predicting who's going to be better for either side. The area that I would say I think would be significantly improved would be financials that deal with mergers and acquisitions, just because a Trump victory would mean Lena Khan would be removed. And she's certainly been a stout opponent of any sort of mergers that have been proposed so far. So, Morgan Stanley would certainly be viewed as a bigger winner under President Trump, I would say. There are a few of my early thoughts. Terry, what are your thoughts here?
Yeah, I pretty much covered most of the landscape, including the regulatory side as far as transactions. And I think that there's a generalized financial sector deregulation potential that shouldn't be ignored. And it's possible, even though there's no love lost between Trump and bank CEOs, it's possible that that's actually a boon for Wall Street. But I think that, left. I mean, we have areas where we see some crazy squeezes if Trump gets in, just as far as environmental issues are concerned, generally speaking. He's been really, really open. And then, of course, the energies in general, obviously get a pop. But otherwise,
I would just add on, Terry, we article a couple weeks back on nuclear energy and the small nuclear module reactors. That could be an area that sees a little bit more interest under Trump. MR scale was one name that we highlighted in particular. Constellation MEG is another one that could see some interest going on. So Fluor, who build a lot of these nuclear reactors, that's a viable alternative as we search for ways to power this AI revolution.
Absolutely.
The area that we could touch upon here, Terry, I know you've been following this closely, is the bond markets. And again, we are not political. We are just we're hearing from bond analysts, and there's actually a Barron's article out today discussing this. So, Terry, you want to just talk about the Trump policies and how they could be viewed as impacting yields?
I mean, what I've come across is basically said, that would be a problem for bond bulls, and you'd see the long end of the curve, rates move higher. The idea, constant commentary on what we might call the Biden administration's fiscal excess, that could go into overdrive under Trump.
Yeah, simply the idea of tax cuts and tariffs at this juncture could be reflationary. So, I mean, we did see that 14 basis point pop in the 10-year following last week's debate. So, again, we're not a political website, just pointing out the facts of what the investment community and a lot of big money is kind of here, and that's what you want to be swimming with.
Yeah, one other proof point for that is you had the debate on Thursday night, and this morning we had great PCE data that should have been, no other factor involved. You'd certainly look at that PCE data point and think, you're lower on that. And they jerked lower for a few minutes and then took off to the upside.
Got it. Yeah. It's pretty interesting to see how the market would react later on. And so from week, the Q2 earnings will coming up. So there's definitely more to want in the stock market and as well as in the bond market.
And we will be discussing our Q2 earnings preview. We would posting a piece on it shortly, but that will be in next week's discussion. So tune back in next week, and we'll have a pretty comprehensive review of what to expect for the upcoming Q2 earnings season.
Yes, I think that's probably wrap up today. And I think we have some interesting findings in terms of individual stock, the macro trend as well as the election trend and what stocks that will be impacted. So thank you, Jay and Terry, for tuning in today, and look forward to talk to you two guys next week.
Thank you, Sherry.
Thanks a lot. Take care, Sherry.
Have
Yeah.
a good one.
Yeah.
Good talking to you, Jay.
Too.
Always a pleasure.